Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. Well, we are here for the main event. Happy Friday and happy, or not so happy, depends on how today goes, NFP report. We've got 428 people here as soon as we hit go live. So it's good to see everyone. Welcome to the degenerates. Welcome to the dedicated. Welcome to the people taking it seriously. Welcome to everybody who's here. Thank you for being on today's stream for, of course, what is, in my opinion, the most important economic data release of the month. This is more important than inflation at this moment. This is more important than the Fed meeting, in my opinion. This is it. The NFP report is huge. And today we're going to be talking about not just, you know, what the number is and trying to guess where that's going, right? Because a lot of times I see people in the comments section, and no shade if this is you, but I've been doing this for years, and every single NFP or CPI report, people hop in here and they'll get on their keyboards and say, should I buy gold or should I sell NASDAQ? And I just want to say, we are not the stream for you if you're looking to gamble on the spike. What we do in this stream is we actually take a look at what NFP stands for, what it represents, and the trends that it could foreshadow for the US economy, which impacts pretty much everything else. The bond market, commodities, stocks, and indices. All of these things are heavily impacted by the state of the labor market. That is what we are going to derive today from this NFP report. That is why it is so important. If you are here to trade the 1-minute chart and trade the spike and guess which direction that thing is going to move or how far it's going to move, I would recommend that you leave this stream, because we are not here to gamble. We are not here to make some sort of gut prediction on where the number is going to go. We are here to actually talk about what this means for the US economy and whether or not the Fed is likely to cut interest rates 1, 2, 3 times the rest of this year. Are they going to do a 50 basis point cut in September? Is that possible? Well, if you get a negative jobs number, it might be on the table. So that's what we're here to do. Again, I know a lot of people are going to jump in here. You're going to see them in the comment section. They're always there. Nick, what's the gold signal? Do I buy it? Do I sell it? Tune it out. We are not here to speculate and gamble before the second, it drops. That's a very dangerous thing. I'll tell you why. Even if you're right in direction, like let's just say you drop down to a 5-minute chart and you say, I think NFP is going to make gold skyrocket. You could be right, but the broker spreads will go so wide that you could get knocked out of the trade and take a huge loss, especially if you're using margin or leverage. So please be careful. NFP reports are notorious for blowing people's accounts. I shouldn't say that. People are notorious for blowing their own accounts on NFP day. Don't be the gambler, okay? Let's talk about gold. Let's talk about indices. Let's talk not necessarily about trying to make a gut prediction of what NFP is going to do, but rather how it could impact the charts for the next day, next week, next month. If you get an NFP report today, guys, and I am serious about this. Also, do I see this correctly? Look at this guy's profile picture and look at what he's got. Okay, that's awesome. Random Moss guy. I like your profile picture. It's literally the edge finder in the profile. It's awesome. Okay, so sorry, that really caught me off guard. Here's what I want to show you guys getting started here. The NFP report has been consistently trending down. So this is non-farm payrolls in the US over the last, what are we looking at? Since January of 2024. So this is over a year of data. And look at what it's been doing, right? Trending lower. This is why we say that the labor market is showing evidence of cooling off, right? It's not a question, it's happening. The question today is whether or not that is accelerating or stabilizing, right? So when we look at the NFP report, the prior number came in soft. We got an expectation of 106,000 jobs. We only got 73. The prior one before that, we did get a beat of 147,000. Forecast was for 111. The problem is they then revised it a month later down to just 14,000 jobs. So what we're going to be looking out for today is revisions to the number that we got August 1st. Are they revising things higher or lower? That's going to be key. By the way, they historically just so happen to revise everything down on average most of the time. No shade there, but coincidence only goes so far. You start recognizing that almost every jobs report gets revised lower. Anyways, and that's not a conspiracy theory. It just doesn't make sense. They revise so many of these numbers down. It starts making you think, how inaccurate are we at tracking jobs? But anyways, the thing we're going to look for today is we are looking for a number. We're expecting 75,000 jobs, which, by the way, guys, that's a low number. It's not a very high number. 75,000 jobs. Previously, we got 73. If this number comes in soft, what do I mean by that? Lower than forecast. If we get 50, if we get 25, what if you got minus 10? If you got true weak jobs, what do you think that does to gold and the dollar, right? It should be obvious. Gold would love it. Gold would skyrocket if you got a negative jobs print today. That's my guess. But when I say guess, I don't necessarily think that's what's going to happen. I have no idea. I can't predict the future, right? And no one else can. So if you're going out and making a big gamble right now, be very careful because you don't know any better than the market does. The market's not moved yet. So if you're making a prediction, you might be right, but long-term, you keep doing that, spreads are going to eat away like crazy into your account because the markets are so spready. They're so wide right now. So look, what about if we get 100K? What if we get 120? What if we revise the previous number up? What if you get a strong outperformance in the jobs number? Yesterday, we had good services PMIs. It's not impossible for the jobs print to come in strong, right? So this is why I say don't try and predict this stuff. Don't try and make a huge gamble as to whether or not you think NFP is going to be strong. Now, I do have a slight lean based on the data, which is I still think gold and silver look great. You guys know if you've been watching the channel, I've been very bullish. Long silver personally. We're sitting on a really nice trade on this one. But I don't know where my chart, like TradingView sometimes just does not load my chart markups. It's loading it for gold, but it's like I lost my silver chart markups, which is really frustrating because I had my whole trade mapped out in here. Anyways, I do have a slight lean, which is, look, my dumb brain says jobs data has been weaker than expected consistently. Not just on the NFP report, but also in the ADP numbers, right? ADP numbers have been trending down. We also have JOLTS job openings, right? Job openings in the US have been trending down. We also have wage growth, not necessarily rising, right? In fact, just gradually cooling. We have unemployment claims ticking up in recent weeks. So what this tells me is that the path of least resistance on jobs data today, to me, would be, I think we could get a soft print. Now, again, I'm not willing to go make a huge gamble because I'm saying like 55% chance over a 45% chance we get a strong jobs number. I'm not super strongly convicted and never really am with my trading. Like, I'm never going to make this huge, oh, this jobs number is going to be terrible and I know it, right? Because I don't know that. I can make that guess. But the old expression in trading that has been really beneficial over the years for me has been hold on loosely to strong opinions. Hold on loosely to strong opinions. So I think jobs data is cooling, but if I'm wrong, I'm wrong. Change my mind, move on, take profits on silver, which is so frustrating. Well, I guess I have my SLV trade. I can pull this up. But my chart markups disappeared. Does this happen to anybody else? My chart markups on SLV, which is so frustrating because I've got 3 minutes and I'm missing all my support levels. Anyways, that must be a trading view thing. Did anybody else have that happen? Is anybody else's trading view charts missing? I mean, like, it's on there for S&P. Anyways, what could this do to stocks, right? Just refresh the page. Okay, thank you guys. Let me try it. Let me reload this. Wow. I feel really stupid. I've done this for 10 years and I didn't think to do that. Thank you. You saved me. Let's not talk about it. All right. So that worked. So there we go. We got silver on the screen now. So silver, this is where I'm at. I have a long position. If we break through the lows today, I'm taking profits. Gold looks like it's just in a monster uptrend. Beautiful buy the dip intraday. Yesterday looked really good. I didn't take that trade. I'm still long silver. I have a short position on Bitcoin. It's going terribly wrong. Fortunately, it's not a big position. So I have a short position. We'll see if that turns around. If it doesn't, I'll stop out today. Let's see, S&P 500, I'm neutral. I think if you get a lukewarm jobs number today, stocks go higher. And I think if you get too hot or too cold, stocks go lower. Why is too hot bad? Well, because it would dash the hopes for rate cuts. If you get a really strong jobs print today, like 120, 125, which I know is not really strong on an absolute basis, but it's really strong relative to forecasts, that would send the market into jump mode. I'm sorry, into sell-off mode, because yields would jump, right? So if you had a huge spike in yields, that would rule out, maybe one of the 3 or 2 cuts that the market thinks we're going to get this year. That could change dynamics, and actually a really strong jobs print would be, in my opinion, bearish for stocks. A really weak jobs number would also be really weak for stocks. The stock market wants to see rate cuts, but they also want the labor market to hold up. So they want something kind of in line with expectations. If you get like 70 or 80, stock market probably still moves up. So we've got 1 minute to go, guys. I'm going to go ahead and pull up our charts here. By the way, we've got 1,076 people watching. If you are enjoying the stream, if this commentary is helpful to you, we do this every day. So come back and hang with us. Come trade with us Monday through Friday. Make sure to subscribe to the channel if you are new. Hit the thumbs up button. It really does just help out to support the stream. And yeah, we got an action-packed show today. I got more information for you. We've got something happening at 9 as well. So don't go anywhere. We've got about 45 seconds to go on the jobs number. Stocks are, interestingly, Dow Jones is pushing lower here prior to the report. The dollar index is also pushing lower. You've got gold up. Bitcoin is up. Oil is lower. NAS holding all of its gains. Kind of interesting. You're seeing tech outperform. Actually makes sense. You had AVGO, Broadcom do really well, as well as Tesla up in the pre-market. So NASDAQ being yanked higher on that. Be very careful. Please don't over leverage. You'll thank yourself later if you don't. We never know with certainty what price is going to do, so please be careful. Here comes our NFP report. Breaking news. All right, so dollar is lower here, guys. Gold just spiked. Okay, so that's going to signal to me. This reaction is signaling we just had a bad print. Yep. 22,000 jobs? Guys, this is a 300 million people country. 22,000 jobs is what we added. There it goes. The soft jobs trend continues. That is going to be bullish for metals. That is going to be weak for stocks. That is going to be, well, Bitcoin's actually rising on that, which is dramatically not what I expected. But the counter dollar trade seems alive and well. Stocks are a little bit lower here on this. Look at that, gold and silver jumping up by 0.6 and 0.7% respectively to the upside. Russell is lower. The dollar is lower. Oil is lower. Gold is ripping here. Gold up 0.75%. Is that, I think that's a fresh all-time high, guys. Let me just double check. Nope, very close. Gold threatening that all-time high here and just continuing the ripperooski. Take a look. There is silver making a good push here up to almost $41 an ounce. Copper's up as well. Oil prices dropping on this. Soft data here makes a lot of sense that oil prices would continue to go lower. Bitcoin, again, I am short on this one. I'll take a loss if it rips through that high. Silver, I'm just going to continue to hold. This looks great. I would love, as I have my long position still open, if we can get a break through these highs. I didn't take profits on this. I'm not, I have no, as you can see on my brokerage order, I've got no take profit on this. I'm just trailing stops. We scooped these lows, really nice push off this. I'd like to see a drive through those highs. If we can get that, I'm going to trail this stop loss a little tighter. So I'll keep an eye on it. But silver's looking good here. Gold also looking good. Dollar soft. Take a look at the counter dollar crosses. Pound dollar, I'm going to take profits on this one. I've got a long trade on that. Beautiful. TLT is probably dropping. I'm sorry, rising. Yields are dropping. This is another long trade for me. Okay, this is exactly what the doctor ordered. Very, very nice. Stocks are still up, holding their gains. You might be a little confused by this, but just remember that stocks, they don't actually ever go down. They just go up. But I'm just kidding. But yeah, they are up here, which is not the reaction I would have guessed. But again, it's still 2 minutes after the report. So I would be careful with this. To me, that looks like you could get a fade. That's a really soft jobs print. And to me, that would be concerning in terms of the state of the economy. If you have that much weakness in the jobs report, yeah, you're going to get rate cuts. But to me, that could be a short-term, response. Oh, yay, we're getting rate cuts. But longer term, that's not super positive for the U.S. economy. And I also got to check something. Did we revise anything down? Am I missing something? Let me check here. The employment data, did we revise? Hold on. Did we revise? Okay, little to no revisions to the previous number. They revised the previous number up by 6,000 jobs. So not too much. We also got other stats here. 4.3%, so remaining unchanged on the unemployment rate, or I'm sorry, in line with expectations, ticking up from 4.2. Average hourly earnings came in line with expectations. Canada saw a tick higher in their unemployment rate and weak jobs as well. So North America experiencing a little bit of a slowdown in jobs numbers. Let's check back up on the gold and silver moves here. Oh my goodness. Ladies and gentlemen, it's a place to be, man. Gold and silver, baby. So we're looking really good. Bitcoin up. So this is my losing trade for the day, but fortunately where I am down on Bitcoin, so I traded IBIT, so I'm in a loss on this one, down $800 on this trade. So this one's not going so well. I'm more than making up for it though on the silver run up. Really, we are running hot on silver right now. The other one is TLT, but I don't have a long position. I actually have a short put position. Unfortunately, Weeble's integration with TradingView does not yet show options trades, and the options market's closed until 9:30 anyways, Eastern time. So that's an hour. So, but yeah, I mean, look at this, guys. We've got gold and silver, baby. That is beautiful. Pushing to the upside. Price action looks great. Again, the way I'm going to manage the silver trade is if we can get a push through these highs, I'm trailing that stop loss up and away up into this area. And again, gold looks, we just hit an all-time high, guys, 35.83. Let me ask you guys in the audience, can you give me your feedback on this? Do you think gold is going to 3,000? Which one's more likely? Is gold going to 3,000 or 4,000 first? They're about equal distance, maybe slightly closer to 4,000. Do you guys think gold is going to 4,000 first or 3,000 first? Let me know. I gotta say, to me, 4,000 looks like it could come in a hurry. Look at this move, right? That's $900 an ounce move, right? So to get another 425 points to the upside to get to 4,000, again, crazy. A couple years ago, guys, we were talking about $1,500, $1,700 gold. Fantastic move to the upside. And you know who's been on the long side? We've been ranting about this. You know who's been on the right side of gold? It may not surprise you that the big winners in gold, drum roll please, have been, ready? Let's go back. What do you want to do? 36 months? Let's look 36 months back. You know who's been buying gold? Starts with an I and ends with institutionals. Institutionals have been so long on gold for months and months and months, years and years and years. And we've been saying this on the channel because look at this yellow line. The yellow line shows you the long percentage of institutional transactions, right? We're looking at the commitment of traders data. This is not speculation. This is not trying to determine what institutions are doing from candlestick patterns. This is not rumors. This is not Wall Street bets. This is not any of that. We're straight up looking at the CFTC's weekly reported commitment of traders report to track what institutions are buying and selling. They legally are obligated to report this. We track it, and we have built a tool to be able to see what institutions are doing over time. Do you see what I see? The blue bars versus the red bars. Red bars are their short positions. Blue bars are their aggregated long positions, right? So if you pooled all their money together, that's what this software does. It shows you the aggregate. Institutions have been long. Anybody else lost money trying to short gold in the last few years? Because this might have been why. Institutions have just been riding this baby to the long side, and for good reason. They've been very correct in this idea. 3K, 4.236 extension of the 2020 to 2023 range has basically been hit. Cameron, thank you very much for the $5 donation to the stream. I greatly appreciate your support. And coffee this morning is on you. Thank you so much. Appreciate that. Yeah, I mean, it's valid to think that gold could have a pullback, but 3,000 seems really difficult to even see coming back into play. Could it happen? Of course it can happen. Markets are crazy and they can shock you. I just think that most likely path of least resistance is for gold to keep moving higher because, again, they print dollars every day, but they can't print gold, right? They got to mine it. And that's a lot harder than printing it since it's paper, right? So, and nowadays, you know, banks, they don't even print physical currency. Most currency is created digitally through banks, right? So you have to be real careful. You know, if you're short gold, you're essentially long dollars. And so to me, that's just a trade where not necessarily long the dollar versus other currencies. That's different. DXY, long DXY is not the same as saying I am buying fiat currency and stuffing it under a mattress. To me, that is a trade that is a losing one over the many, many decades for a reason. That's why gold and silver go up over time. Not every day, not every week, not every month, not every year. But over time, they tend to drift higher because they keep printing fiat currency. Anybody wonder why young people can't afford homes like they used to be? The same age group 50 years ago could afford homes easier on a, you know, an average wage. It's because they keep inflating our currency. They keep devaluing the dollar from underneath us, or the euro or the pound, doesn't matter. They're doing it all over the world. Governments spend it recklessly, and the consumer, the average American, the average person of the world pays for it. So gold and silver have been a beautiful hedge over the last 20 years, 30 years. You know, gold has been phenomenal. This is a really cool moment. We're watching as we speak, gold hitting all-time highs. Congrats to those who are also on the bullish side of metals. If you can't tell, I'm a little bullish, have been for a little while here. I didn't catch the gold move. I wish I was long gold, but I am long silver, which is actually up a little bit more than gold today. Let's check back on stocks. Stocks are a bit flat here. Again, we're getting rate cuts, but also the economy looks weak. That combination to me signals, if anything, it actually is a little bit more concerning for stocks, but stocks are flat on the day. The NASDAQ is up a little bit. You have to also remember that there was some really big moves in the pre-market with Broadcom jumping by 13.57%. They reported some really strong earnings beats and the stock pumped. This is a big company in the NASDAQ, which is helping to keep the NASDAQ up this morning. So keep that in context. This is why it's very hard to short stocks in general. But metals, to me, have been a nice place to hide out. On the contrary. By the way, this institutional tracker that I showed you here is available within the Edge Finder. If you don't have a copy of the Edge Finder, here is how you can get it for 45% off. So the tools that we build, we actually offer it as a one-time payment, which means that you can pay one time. You don't have to pay a monthly subscription or anything like that. You pay once, you get access to our tools. And this week we're doing 45% off the tool. If you're interested in getting access to our institutional tracking tools, our economic data tools, and arguably one of the most popular features within the Edge Finder, which is our algorithm, which helps to spot trading opportunities like this gold long position, which is why I took, my silver and long positions. They had bullish readings at the time that I took the trades, right? What we're doing is we're tracking economic data, technical data like seasonality, trend, sentiment, and we're aligning these things in our favor, right? We're tracking what institutions are buying. We're tracking what the crowd sentiment is. We're tracking what the month of September historically returns. We're tracking GDP statistics, PMI numbers, NFP reports, unemployment data, interest rates. We've built this tool to look at all that stuff and to help guide the general directional bias of a particular chart. And we track currency pairs, commodities, indices, and much, much more. If you don't have a copy of the Edge Finder, here is your chance to get 45% off. We'll drop a link here in the chat right as we speak to take advantage of that discount. It's a one-time payment, and if you need it, we can also split that up into three payments. If that's something that you're like, I need to split it up, I can't afford the full thing at once, here's your chance. Send us a direct message. Let us know that you're watching the stream and you need a payment plan to make it comfortable to you. I know it's not a cheap product. It's an expensive product for a reason. It's a powerful tool. And we've spent countless dollars on building this thing and maintaining this thing. And so it is worth every penny. So get a copy if you have not already. It's 45% off. And there you go. Take advantage. If you need information, again, we can split it up. Pricing details, the best way to get information is just to send us a direct message using the link right there. You can speak directly to our support team who is standing by here at the office. Okay, so let's recap. NFP was pretty terrible. 22,000 jobs compared to a forecasted 75,000. Gold and silver ripped, as you might expect. What you might not have expected is the SP500 to be flat. At least I didn't expect that. I thought this would have dragged the stock market lower. Maybe it still does, but I think you're talking about stocks at all-time trading highs, hyped up on the idea we're going to get rate cuts, but maybe ignoring a little bit, in my opinion, the prospect of we may truly be seeing a cooling economy. This is a rough jobs number. 22,000 jobs added in a 300 million person economy. It's more than that, right? Isn't it like 330 million people or something like that? You have a huge, miss here in the NFP report. And so, again, there's no use fighting price. And this is why I haven't been in any short positions or betting against the stock market, but I have taken some profits, some stocks that I'm up on. So was kind of hopeful that we would get a dip, and maybe we still will. But for me, there's no holding my breath here. I have other things to trade. Like I said, continuing to hold on to my silver position. I also have a long or a bullish options trade open on TLT. This is looking really good here this morning with TLT shooting up to 87.90. This is a bond ETF, 20 plus year bond ETF. So we're looking good on that front. The other one is my pound dollar long, which actually I'm probably going to take profits on this one. So let me just get that situated over here. I'm going to take profits on the pound dollar long position really quick. So give me just a second to do that here before I forget. I love this this move here. I'm just going to take profits on that one. Okay, we are out of pound dollar. Let me get you the final result on that one. Let's see. We closed out here for a profit of 126.7 pips. Not complaining. 127 pips on that one. I'm going to just take a screenshot and share this with members, letting them know that I'm out of the trade. Just going to take profits, lock that in. And again, I have a lot of positioning that is short dollar. So I'm just going to take a little off the table here and update members. So give me just 1 second as I do that. Let me see. Closing out of GBP USD for 126.7 pips. Profit. Okay, so let me just show you what I'm writing up. So I closed out 126 pips on GBP USD. This is a dollar short position essentially by being long pound dollar. Just going to take that move and call it a day on that one. Just take something off the table here. So I'm out of pound dollar longs. Let me also, so we took this trade a couple days back. Yeah, I took it the 2nd of August. So that's a 3-day trade. I mean, that was pretty quick, but that move, we had a big shoot lower. I thought it was a little overdone, picked up a little bit of a long position on the pound against the dollar, and nice push to the upside. By the way, all trades that I'm taking can be accessed within the Discord. That is also a service that we offer. If you'd like some information on that, we can also get you 45% off the VIP group as well. So if you have interest in joining that, we'll drop a link here in the chat to where you can speak to our support team about getting a membership today and trading alongside us. Again, I'm just going to lock something in on the pound dollar here. I have a lot of dollar short positions by proxy. I have my TLT trade, silver, pound dollar. So just going to take something off the table and move on. But yes, jobs print really soft on absolute basis. A 22,000 jobs number is bad by itself, but a miss when the forecast was 75,000 just goes to show you how rough it really was, right? This is a low in absolute terms number and low relative to forecast number, which is pretty concerning in terms of the economy. The dollar, let's look at some other areas here of interest here. We've got dollar index lower. Take a look at this back down to the bottom into this range. This was part of the reason why I took that pound dollar off the table. You're hitting back into the low end of this range here. You could get a bounce in the dollar here today, but like I said, I'm just taking some profits off the table with pound dollar. I do think you have more downside to the dollar index. Like I said, I just have a range of dollar shorts, so I'm taking something out of the mix in case you do get the further push lower, which I think we could get. I'm still in my my metals long trades. So yeah, so dollar index looks pretty wobbly. Take a look at the weekly chart. You've got a downtrend going on here, big push lower, and this looks weak. I mean, look at every attempt on the weekly chart for dollar index. You see sellers coming back in. I would not be surprised if this makes a push back down towards those lows, perhaps today into next week. But that is not something to hang your hat on. That 22,000 jobs numbers, to me, that signals more weakness for the dollar, and rallies to me would be opportunities to sell into that. Personally, again, not financial advice. You do what you want. I'm just telling you what I'm doing here on the show. So speaking of what I'm doing here, like I said, watching for a closure on this 4-hour chart above the previous highs for silver, at which point I'm going to lock something more in on this trade. Looking to put my stop here. Not a huge trail, but if we can get a break through those highs, I'll lock it in and let people know inside of the Discord if and when I am doing that. But we've got, again, some really good movement there. Yields, take a look at the 10-year yield, guys. We are dropping hard here, suggesting that rate cuts are in. The question now becomes, is a 50 basis point cut on the table? Wouldn't give it a strong probability, but the Fed has room. They have ammunition. And perhaps that is why the stock market is not down here today, is that the Fed has ammunition to cut rates, right? They're sitting at 4.5% interest rates. They can cut some ways, and maybe they will. I mean, there's a possibility they consider. I think before they would choose to cut by 50 basis points, I think the more likely scenario would be they do 25 basis points 3 times this year, right? So that would be September, October, and December. I don't think we have one in November, but I could be wrong. But yeah, yields are, I'm forgetting which one. I think it's October that we do have one. I think it's October 12th. Yeah, very, very interesting. You got yields dropping here. The 20-year yield, the long end is, what is going on with the 30-year yield? That is crazy. 20-year yield is down, 10-year yield. So you're seeing yields across the board, bond market pricing in, okay, we've got some softness in the economy, and that is continuing to the downside. Again, this is good for metals. Now, the stock market is up on really weak jobs. I'm not an alarmist and I'm not short the market, but I keep reiterating this to me is super, super risky to be super bullish on stocks when the jobs report is so weak. To me, you're playing with fire. Yes, you're going to convince the Fed to cut rates, but what if the Fed cuts rates because what if the Fed is cutting rates, but they're cutting them too late, right? So that's the risk, right? The risk is you're cutting rates too late and that the jobs data is already in a trend to the downside. We see, again, 4.3% unemployment rate ticked up a little bit, not huge, but really the big thing is we're just not seeing hiring. Job openings have been declining. We talked about that earlier this week. We looked at it in the data, right? Jobs openings in the US are trending lower. And the NFP report has also been trending lower. Once this updates, you'll see it's down here. Like, guys, this is what it's going to look like when the data updates. You're going to have this. Does that look like a strong labor market? Like, that's concerning. So again, I'm not here to be an alarmist or call for some sort of giant recession, because maybe we see jobs data start to turn around eventually. And maybe the rate cuts are in time. There is that potential, but to me, the risk is too high to really be chasing stocks at their all-time trading highs when we have serious risk to the labor market, as far as I see. But yeah, not a pretty sight. Labor data looks really weak. I'm picking gold and silver before I pick stocks. If you don't have the Edge Finder, like I said, someone asked how much is the Edge Finder. The best way to find out is just shoot us a message on our live chat. So we'll drop a link here. There it is. Send us a direct message here if you want information on how you can get access to the Edge Finder, which is, again, what I use to find the trades that I take using the top setups algorithm, track institutional data, track financials, or economic data, and so much more. So get a copy if you don't already have one. We can also split it up into payment plans. If you need to speak with a support representative, you can do so by clicking the link there in the chat or in the description down below to get a copy of the tool. Don't miss it. We're doing this week only. It's a huge discount. We're doing 45% off the tool, which is a giant savings. Saves you like $500+. So don't miss it. Nick, according to what you just showed, NFP was weak last August as well. Yeah, I mean, the thing is, it's just been a trend to the downside, right? Jobs data has been weak. So to me, you just have to be careful. People are very hyped up on stocks, specifically like tech stocks. So NASDAQ is sitting back at these highs. Could this be some sort of double top potential? Maybe. Again, I'm not willing to bet on it. You can see stocks will find any reason to rally in a bull market. And I do think we are still in a bull market for now. And so I can't bet against this. Again, I'd much rather focus my attention where I think things make more sense, which is the metals at this time. So no need to stare endlessly at the stock market and why is it going up, right? Stocks can go up for whatever reason they want. They are their own beast. But again, my concern would be how much more room to the upside do we have on a really weak jobs number? That's where I think the risk to reward to stocks is just not super attractive. You may get, an attempt through these highs. I just don't know how much more upside we have in stocks, given that we have a labor market that's showing true decline. Bitcoin probably going to get stopped out here on this one. Small loss on the IBIT, which is where I took this trade. You can see, pull up the 4-hour chart. So I'm down $940 on this one, which I know is not a small amount of money, but it's not huge on the account. So I'm short IBIT. If this does break through those highs, I'm going to take a loss on this one. Like I said, fortunately, I've got several other trades that are doing quite well today. Just took a profit on pound dollar. of 126 pips. So we did well in pound dollar longs. I don't want to stick around. A lot of currencies have just been super choppy here. Euro dollar is looking like it wants to break out. Dollar yen pushing lower here alongside yields. That makes a lot of sense. And let's take a look at some other dollar crosses. You got dollar CAD finding a little bit of support there. That makes sense because the Canadian employment data was arguably even worse. Really rough data there. Dollar Swiss is lower here. Kiwi dollar is pushing higher. Aussie dollar also pushing back up to the top end of this range. Yen pairs here. Let's take a look. Euro yen back to the highs. Pound yen, CAD yen lower. That makes sense off weak CAD numbers. Aussie yen, Kiwi yen. Nothing too interesting on these fronts for me personally. Oil prices make sense to move lower here. Weak jobs print. Weak jobs, weak economic outlook, weak demand for oil. So don't love that particular side of things. Gold, beautiful, breaking to all-time highs. Let's watch how this candle closes. Again, we said this yesterday. That might have been it. That might have been the pullback for gold for a little bit. Maybe not. Like maybe we see this thing shoot back lower. But again, that when gold is moving, like that's what a pullback looks like. It's quick and it's brief. And the challenge with it is a lot of people start getting used to that, and every little dip they buy it until they find themselves buying at all-time highs. So I would just be careful with gold. Like if you're in it and you're trailing stops, amazing. Do your thing, right? But for me, silver and gold look attractive. This is great timing because we have something big happening. We have a debate that is about to happen. So we are about to do a debate, which is Bitcoin versus gold. And I'm hosting it between two very veteran traders, Nick and Gary. We're going to be going over to another YouTube channel here in just a second. So the way this is going to work is the stream is going to end on this side. Maybe Chandler or James, if one of you guys could drop the link in the chat here. I would encourage you guys, the stream is going to end over here, but we are going to be starting up in the next few minutes a live stream where we are going to be debating Bitcoin versus gold. Which is the better buy at this time? Now, the coolest part about this is during this battle, you guys get to decide who wins the debate. On a live stream, we are about to go head to head. I'm hosting the event, hosting two traders who are going to be arguing, one for Bitcoin, one for gold. Which is the better longer term buy? Come join me on that stream. We're going to be ending the stream here on this side. The link is in the chat right now. Click this link. Join me. The Trading Battle live debate is happening just after this quick break. Stay tuned. We're coming in right after this. Click this link. Join me over there. See you there.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.